Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what the big players in the market are doing, so institutions and hedge funds, so essentially the non-commercials in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area. From here, multiple rejections to the upside have been created. Every single time that the market tested this zone, it at least reacted to the area. And most of these rejections are quite massive moves to the upside. And at the moment, the market is testing the exact same zone. Therefore, there's a good probability of seeing yet another rejection to the upside away from this level, as already happened in the past every time that the market was testing this exact same zone. So on the monthly, everything seems quite bullish. Let's drop down on the weekly time frame and see what we have from a weekly standpoint. Now here in the weekly, the pattern that the market has been creating is quite clear. We're having the formation of an M pattern from a weekly standpoint. And after the creation of an M pattern, what we could expect is a potential rejection to the upside, completing the M pattern at the neckline, therefore at the previous support turned resistance. So here on the weekly, there is definitely the possibility of seeing this potential rejection to the upside, completing this M pattern at the neckline. We can also notice that when it comes to the horizontal structure that the market has at this area, this exact same zone was already acting as a minor level of weekly support all across this area, creating multiple rejections to the upside. So as the market is testing again the same zone, there is a bit more probability of getting the rejection to the upside, as the market does have some minor support around this zone. It's definitely a good extra confluence to have at this level. Going down on the daily time frame, what do we have? Now here on the daily, the structure of the market is clearly still bearish. Now, I also spoke about EURUSD just a few days ago when the market was around this area and explained all the reasons for which we could expect this rejection to the upside, completing the M pattern at the neckline. And in fact, that is exactly what the market did. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. Now, when you have an M pattern and the market completes it at the neckline, the completion at the neckline is by definition a test of previous support and resistance. So you would expect the market to respect that resistance. And in fact, that is exactly what the market did. So far, the market has been behaving exactly as you would usually expect in a situation in which you have this price action. So as I was saying, the price action structure at the moment is still bearish, with the market creating lower lows and lower highs. Now, the last high that the market has created is exactly here. So when you have a downtrend, so a market is creating lower lows and lower highs, the moment in which you would expect the downtrend to be finished and the market to switch back to an uptrend is if the previous high gets broken to the upside. And at that point, you expect the market to switch to creating higher highs and higher lows. So it is essentially the standard shift from a bearish market, so lower lows and lower highs, to a bullish market, so higher highs and higher lows. So in a situation like this, as we have the previous high exactly at this zone, this is the level that the market needs to break in order to shift back to a bullish market from a daily standpoint and reject that monthly historical support that we have identified at the beginning of the video. So until the market will remain below this level, it can easily continue to do lower lows and lower highs because it is in a bearish market and has bearish structure. However, if we get this break above, that is where things get interesting, because after the break, what we know is that previous resistance would become support. And if we get a break of resistance turn support, at a level at which we have historical support from a monthly standpoint, that increases the probabilities that inside of this area we could see institutional longing. Speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so what the big players and the institutional side of the market is doing. Now, what we can notice here is that in the long run, it is very apparent by looking at the net positions that institutions have moved aggressively to the bullish side for the euro. And keep in mind that if we're looking at the data for the euro, we're actually already looking at euro USD, because all currencies on the spot are traded against the USD. So if institutions went from having a negative net positioning, so with more shorts than longs, with 177.2k shorts compared to only 167k longs, all the way up to now having a positive net positioning of plus 43k net positions with more longs than shorts, so the complete opposite, it is clear that if they shifted in such a clear way, so from having more shorts than longs to more longs than shorts, they would expect a potential rejection to the upside away from that monthly historical support. Otherwise, they wouldn't completely reverse their positioning. So institutions expect Euro USD to get stronger, and they are already longing Euro USD. So let's keep that in mind and move back to the technical aspect of this market. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. So from a daily standpoint, if we get a break above this resistance and go for a retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.